Welcome to Momentum Monday. Today is August 21st, 2022. Howard, have you been putting any money to work lately, or you're just sitting on the sidelines mostly?
I have to say, as a trend follower, it's just been brutal. Like, I took my hits and I don't have entries. We're talking to you every week, so it's hard to, other than the occasional trade, which is hard to do for most people. It's just been my worst type of market. As you know, I've been watching me. But the good news is I don't need the stock market like other people. You know, this is a great reminder how good it was for, I don't know. If you think about the FANG world, how good that trend was in software and the cloud stocks for 8 years. I mean, I got to find a new trick. So walk us through what we're seeing.
Yeah. Okay, from a short-term perspective, I think the indices are kind of stalling here near potential resistance, meaning that, you know, the 200-day moving average for the S&P, it kind of tested it and it's starting to pull back. You know, that typically if this is a longer-term bear market, you know, this is probably a good short opportunity, but we don't know that. What we know is that the US dollar is working up again. I mean, the US dollar basically is back to equal to the euro.
Yeah.
It's deflationary, but it's also a big headwind for most multinationals, for most big US companies.
Yeah.
Interest rates are perking up again. If you look at a weekly, 3 weeks, have been going up 3 weeks in a row. So, and software and biotech, which have been the leaders in the summer, are starting to feel that, especially last week. So, I mean, that pullback last week could be because of that monthly option expirations. Typically, we see a counter trend move on that week, but it could be something more. And I think we'll know more in the next week or two, especially into September, if this rally is more sustainable. The silver lining for bulls here is that we continue to see mostly positive market reaction to earnings. Even last week, when most stocks went down, we still saw companies that beat earnings estimates just, you know, go up, like Globe and Wolf, which is like a semiconductor play, and Bill.com on Friday, despite weak cloud stocks, was pretty.
This product is from like the 1920s, so it's like
Yeah, we're talking about market reactions, not about products.
No, you know, but I'm all about the product too, like beyond the price. When momentum's over, I gotta find companies I believe in. And there's so many old crappy software companies that have had a great run that anyways, keep going. Sorry to interrupt.
From strictly a sentiment point of view, even companies that are missing earnings estimates, you know, they're just gapping down and they're very quickly recovering. Like Deere was the latest example on Friday. So just based on that, just based on market reaction, maybe the market is not ready to sell off yet. There is some underlying bid. And obviously we're still seeing some semi-decent setups in the market, stocks that are, you know, acting constructively, setting up.
Size of this company, Cytokinetics.
So in various sectors, not just solar, we also have semiconductors, biotech, obviously, definitely quite a few names that are looking constructively in the space, but you know, that could change very quickly if interest rates continue to go up and if Fed decides to you know, stay on its course. So far, the whole premise behind this rally in the past couple of months is that the Fed will probably pivot, and they're not gonna be as harsh, raising interest rates and dropping their balance sheets.
You want me to? So let me, the things that stand out to me, I'm like still a macro, I hate being macro, but the macro's so hard to bet against here. It's hard to bet against the Fed. The spread between inflation and rates is still massive. And rates just can't get a bid. And that chart just scared. The dollar makes no sense. I mean, obviously it makes sense compared to where we're comparing it to, but this dollar up move has not been good for stocks. And so until this is broken, they're in this downdraft is in lockstep with the dollar, rise, starting to really jihad last year. And then the rates is just too big to overcome. And I say that as a fringe person who loves stocks. I bought my first T-bills, right? Like 3.25. I mean, if I can get 5%, you won't see me in the stock market for forever, other than a few indexes, and so we're closer to 5% than we are to 0% for 1 year's treasuries. And who over forgetting 50, who over 70 is going to buy a stock if rates at 5 or 6%?
I mean, they shouldn't in general. If you're 70, you should not be really.
Oh, yeah,
buying
good point. But the last 14 years they were YOLOing like millennials. So there's competition. Yeah. All I mean for interest rates is in a bear market. I've said this before. We're in one for the stocks I like.
Yeah.
We're in a bear market unless you flip momentum TV. And by the way, we're this close to like the trend followers going short again, right? And when the momentum sellers, they're not the momentum people are not emotional, right? Like I'm quasi momentum. So if they got to get short, they'll get short. And like they're short at the 200-day because that's what machines do. And we couldn't get through them. You also have a horrific time of year where people are like busy getting their kids back to school, mood shifts, fall's coming. Natural gas at all-time highs here. Where's natural gas?
Yeah, definitely it's been breaking out.
Jesus, what a tax this is. Oil won't break down. So again, like for my marginal dollar that's not going to startups, like I need to see some strength. You make a living swing trading, so I think there's just tremendous opportunity for Nimble. It's a great time to be involved.
Plenty of moves, definitely. Plenty of opportunities.
I'm too busy to like do anything but indexes here, and there's no momentum anywhere. So by utility, I mean, what's breaking out? All-time highs, utilities. That's never been a good sign for the overall market if they're leading.
Yeah, I mean, as you mentioned, natural gas. So remember that earlier in the week, I saw someone on Twitter posting that, like, some of the businesses in south of Italy, they said their electricity bill is up 8 to 10 times.
Yeah.
Compared to
$700 in Coronado.
Compared to last summer. I mean, most of those businesses are just not sustainable. Like
it's brutal. It's hot. My friends they're staying at other friends of mine houses, and I'm like the heat. It's over 100 degrees still. It's just tough. Like America has it easy compared to Europe. And
I mean, yeah, I mean, the American and the US dollars are probably the best houses in a bad neighborhood right now, and
but that's not good for tech stocks, and that's kind of what interests me. So seed investing still, luckily for me, I didn't have any hand in having the carry tax. Arizona came through. Again, like if push comes to shove, I pay my taxes. I didn't have a hand in like saying carry taxes weren't going to work, but like venture capitalists, as well as we're paid, take tremendous risks. So it's like half the stuff that governments focus on is bananas. And I think the most important thing is this bill, like, this infrastructure, or whatever you call it, the climate bill. I got to wait till people really decipher, but every podcast that I've listened to is like, this is really interesting. And this is probably why solar's been running, is people were front running this bill. But, it's good for all energy, really. So, I put my first XLE position on in, I don't know, 20 years, last week. So
definitely one of the strong.
Yeah, but that's just
purely
the only uptrend, and still feels, and it's such a small proportion of the S&P, it could fucking run. Yeah, but like, I'm not going to buy biotech at the 200 day. I'm not going to buy NASDAQ at the 200 day coming up steeply. Like, I'm not going to buy stocks into the 200 day at the worst time of the year with a strong dollar and high rates. So like, I don't short stocks. So I'm not like, I hope I'm wrong. I hope but I don't see the catalyst yet, because the things that matter to this rally aren't helping. Like, rates just have not dropped, and the dollar is bouncing, and energy's still expensive. So the great news is I don't know anybody unemployed. I truly don't. If you want to work, there's work.
Yeah.
And it's tough for restaurants. Every time I go to a restaurant, even the best, my favorite little places that don't, they're just local, just can't get service. The food quality hasn't dropped, but like the service quality has dropped. So restaurants seem to be taking it the most on the chin. Who benefits? McDonald's. They understand supply chain. Like, this is like a no-brainer, but like, it's not like a growth company. Apple's, it benefits. They've been kicking the ass out of Shopify and Facebook and taking all their market. And the government doesn't seem to care. They're our god that we like, but they've destroyed Shopify and Apple because no one can advertise on Facebook because everybody's opted out for ads. So small businesses, just small e-commerce, which Zuckerberg really dropped the ball here. If we look at Facebook, he buried himself. Oh yeah, Meta. Okay, because while he was fighting the newsfeed and politics or defending himself, Apple stuck small business with this massive marketing tax. So if we look at any of these DTC brands, Allbirds, or I don't know how to pull up all these names because I don't own them. They were overvalued. But these got public and have capital. But if you're a $1 to $5 million or a beginning DTC company and you want to sell toothbrushes or whatever you want to sell, you go to Alibaba and you source something and you want to set up a site. Okay. If you got 100 customers, you knew what your customer was, you go to Facebook, buy those customers. You can't do that anymore, right? Because 95% of people have opted out of getting, so Apple really stuck it to Facebook, but who they really stuck it to was small business and e-commerce, because these small companies on razor thin margins don't know how to do marketing other than spend it on Facebook and Google, and that's now been taken away by Apple. So, while we were hating on Facebook, we destroyed a lot of small businesses, and those were important because those were good small businesses. We could make fun of all the different Shopify stores, but you know what? Versus opening a retail store for 7 days, this was a great opportunity, and it was a win-win. People could put themselves in business. Shipping still happened. Consumers were happy. And now we've taken that lever away by killing Facebook. And I'm not saying that wasn't inevitable anyways, but that's a big problem. And that's why Shopify is not bouncing, and that's why Facebook is not bouncing. And by the way, FedEx is doing great because they're charging $100 to ship like a pill bottle. Like, go look at FedEx. Like, the prices are. Have you shipped something by FedEx recently?
No.
It is bananas how expensive it is. So, so who's winning? McDonald's is winning. The drug companies are winning. Goldman is winning. McDonald's is winning. Who else is winning? Exxon is winning. MasterCard is winning. LVMH is winning. So you either have luxury brands, Apple and LVMH, or McDonald's and drug companies. So it's not like America is not doing great. These companies employ a lot of people, Ivan, but own the index. This is like owning the index. Why the S&P's outperforming the rest of the world? Like, especially when we factor in the US dollar, like S&P is like all-time high relative to foreign markets. So money keeps pouring in. Here's the other good news: the Saudis. Aramco, I don't know if there's a ticker. Do you have the ticker for Aramco? It's 48 billion in profits.
I'm not sure.
48 billion in profits.
I don't think they have it here.
The largest profit ever. So all that money is going to come into the U.S. What are the Saudis are going to do? They're going to buy treasuries. They're going to buy, Apple. They're diversified. So there is some good news, and that's why I think the market hasn't cratered. Is this money, as long as there's a strong dollar, the reason it's a strong dollar, everybody's divesting their oil profits from around the world, and soon to be your natural gas profits, and your drug profits, and your oil profits, and they're going to buy American stocks.
Yeah, of course. Yeah.
So there is a buffer underneath, and the same thing with Warren Buffett. He's sitting on all this cash. What's he going to buy? He's going to buy more Apple if it drops 20%, like he did when it went to 130. So yeah. I just think it's a tough market to pick stocks, and in a bear market like this, the index is probably the way to play it. But tech, the QQQ seems done to me mainly because of the U.S. dollar and rates, and there's so much dry powder on the sideline to invest in startups. I think that's where people are going. So, hopefully that helps. But I don't have any like hot ideas other than LVMH, McDonald's, Apple, Exxon, NVAQ, Nasdaq's doing well, MasterCard's holding in there, the drugs.
Yeah, but what's your time horizon on those?
Forever, because I don't want to. Most of them I just own through an index, right?
Okay.
Like, I own some Apple, it's still my biggest position. I don't own McDonald's. I don't want to buy drug companies because I don't know how that builds. The new infrastructure, whatever the new bill is, like the government can basically price fix drugs, which maybe they should, but like that's a war zone. So with Merck and Bristol Myers breaking out, who knows? It's not like they're growth companies, and they're probably benefiting from the strong dollar. So that's it. I think people just have to be patient here because the competition for people's dollars is now actually some T-bills and bonds, and I think value hunters will go look at the cheapies will still go after China, even though I think it's got more risk than ever, and they're going to look at emerging markets because relatively people think there's value there. I would stay away, but
China is a mess. I mean,
yeah, I think it's about to get worse.
Yeah.
So we'll see. And a lot of people. The other thing is, a lot of the smartest people I know are just hammered, and not down 30% or high 20s, like mid 20s, like I am, but like 50-60%.
Right. Were they short?
Well, and then they got short retail into this rally, and retail kind of exploded. All the crossover. I read all the quarterly letters, and it's surprisingly a lot of people didn't make money in this June-July rally, or they got short the wrong stuff. They finally got their short muscles raised. So there's a lot of upside down people, And then I look at crypto, and I'm like, why are people speculating there in this market? Like, so I own Coinbase, but but speculating on raw crypto right here in this market, it's just not my favorite idea. So I think people have to be careful around the edges. I think the multinational American companies, obviously, no one can stop them. But I think indexes are the way to invest for most people right in this bear market, because the winners are so narrow and few. Where are you positioned right now?
I mean, there continue to be good opportunities every single day. I definitely am nimble in this tape, and for example, on Friday I traded Bill intraday, a few times. Pretty good opportunities. The day before I traded Wolf. Like I trade stocks that gap up on earnings and trade a lot of volume on earnings, because many of them tend to follow through if they have big volume breakouts. So I just focus on those names. And
but these are like 3-day swings you're doing and stuff?
Yeah, sometimes longer, sometimes 2 weeks. Okay. And definitely do a lot of intraday trading on the day of earnings and the second or the third day. These have been really good setups.
It's not your typical Ivan stuff.
No, I mean, like I rather hold you
Yeah.
know, for 2 to 3 weeks, but in this market, that's not what paying the bills. So
Yeah.
I've been more
But
short
I think
term.
that's what people should realize. You pay the bills with this. So it's like if you know, you're up against all these guys thinking they know how to swing trade and they don't. Like I don't want to trade against you because you actually are doing this to make a living. And I think a lot of people think that when the markets are this hard, the true people who are making a living, who are focused on this 24/7, do have a bit of an edge. And that's why I kind of completely am not trying to like do anything funky in this market. You know, I'm waiting for a good trend to emerge. And the only trend right now, as I see, is higher rates, higher energy. It's broadening energy, which could be good long term, and a strong US dollar. But that's about to go out at all-time highs with Warren. Oxy.
I mean, not really, but
No,
it's
not really.
like new.
Coal's about to, Coal's break up 20 bagger.
Oh yeah, coal, super strong coal, definitely all of them. Like anything really
Jesus.
related to
You know,
energy.
coal jokes we were doing all.
What was that? Like what?
80 cents there's a bull market somewhere always. Good lesson.
Yeah,
I don't understand
always.
the first
Yeah,
thing about
always.
it. So anyways, you know, for there's a lot to learn. And you've adjusted to this market. For me, my adjustment is just high cash. I hope everybody has a great week. Ivan, thanks for doing this.
All right, Howard. See you next week.
Okay, everybody.